Good morning, traders. Good morning, Bookmap community. Welcome, welcome, welcome. It is Monday, February 26th. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how it moves through the two-way auction process. I'm excited to dive in this morning and give you some insights about what might be happening with the markets today and this week. But first, I thought I'd start with a little bit of a philosophical type of conversation. Looks like my chart might be frozen here, my data. There we go. So I just wanted to talk about something we've been talking about quite a bit in the brigade as of late, which is the concept that the market moves very differently when it is in a bull market as compared to when it is in sort of a two-sided market or a bearish market. So if we start by zooming out and taking a look at the monthly candles, you know, I remember back when I was trading in these times, way back in the days of the 2020s, when we were in a bull market, and there were a lot of memes that were out there, right? Things like stonks only go up, and buy the effing dip. And buy low, sell high, ha ha ha, right? There was all sorts of these sort of catchphrases that were out there, which basically said the same thing, which is that you want to be a buyer in the market. You don't want to be a seller. You want to be a buyer. You want to look for opportunities where the market dips and it gets to a fair price. And then you want to get in. And when it goes back up, you want to take profits on that trade. And if that's all you do, if all you do in a bull market is focus on buying dips, there will always be a rip. There will always be an opportunity to get out of that trade at a higher price. Now, obviously, it's never quite that simple, particularly if you're a day trader. On a day time frame, the market can always go up or go down. But I do think it is really important to understand as a conceptual idea that when a market is in a bull market, it moves differently than when it is in a bear market or sort of a two-sided trade market. And the reason that this happens is because of the larger players. Now, this is an oversimplification, so, you know, bear with me. I'm going to keep it really, really simple here. But essentially, there is like a pool of bigger traders, deeper pocket traders that are more like swing traders, okay? They're operating on weekly, monthly timeframes. And much like sharks out in the ocean, you know, a shark can't swim into a coral reef. It can't swim around in that area where all the cute little fishies are because it'll get all cut up by the coral and stuff. It has to kind of stay out in the murkier, deeper waters, right? But it hangs out right on the edge of that coral reef. It hangs out right where those little fishies may just accidentally swim out a little bit too far so that that shark can eat it on up. That is the way that these larger players operate, right? They can't just jump into a trade. Obviously, we're talking more about individual stocks than we are the indexes as a whole, but they can't just jump into positions willy-nilly wherever they want because they'll move the stock price too much, right? If they start going long with too big of size, they'll move the stock price up and then they won't get as good an entry. Or if they start going short, they'll move the stock price down without getting as good an entry. So they have to wait until the little fishies come to them. They have to wait until the liquidity that they need to get into a trade becomes available for them at a particular level. And so when you're in a bear market or you're in a two-sided market like we've had for the last few years, there's sharks on both sides. There's sharks swimming around on the upper edges looking to short and sharks swimming around on the lower edges looking to long. And the whole time that you're in that two-sided market, they are there doing business at those ends. Okay? So if you're a little fish and you're just trying to survive out here in the ocean that is the stock market, you have to live a life with extreme caution. You have to be afraid of the high tide. You have to be afraid of the low tide. You have to be afraid of every little place where a shark could pop out and eat you up. And so as traders, we build a certain mindset around our approach to trading, where we are extremely fearful on both sides of the market, and we're looking for opportunities on both sides of the market, because also as traders, we're trying to ride the coattails of those bigger players, right? We're trying to see when they chomp down and reverse the market so that we can get into that trade. But when you stop having a two-sided market where the battle is two-sided and you begin a bull market where the market is generally, and again, not always every day forever, but just generally speaking, the market is moving up, you have to change the framework for how you think about things. And these silly little quotes like buy the fucking dip, or, stonks only go up, they're about that mindset. They're about that mindset that don't worry as much about the selling. Don't worry about the resistance above. Don't worry about this market tanking and going way lower. Instead, make your focus on buying dips and selling rips. Now, as an intraday trader, one of the things that has really been standing out to me quite a bit lately is this idea of how I used to trade. Back in here, the way I was trading support levels was that I was almost never putting in a limit order at a support level. If the market was going to pull down and I think such and such a level might hold as support, I wouldn't just, blindly throw in a limit order and just see if it holds as support. Because what was very common was that the market would, let's say this is the support level I'm watching, the market would come down and it would like bounce and bounce and bounce off that level. And then all of a sudden it would go and it would crash through and then it would head up higher. And so the way I was treating support levels is I was always putting my entry below that support, essentially where everyone else would have their stops. And that's where I'd be looking to get in. So I would have to sit through watching the market bounce and bounce and bounce and bounce on a level. And sometimes it would run away without me. And I would just have to say, listen, that's okay. Because I didn't want to risk getting stopped out, because I know that's what they always do is come down and wipe out these stops, and then they head higher. What I am finding now, as we enter this bull market where the market's behaviors are changing, is that more often it is actually better to just get in the trade. When you see the support, buy the support. Then what you do is you sell at a higher price, right? So if it's a time like that, where the market has a certain support level and it's pushing in, okay, you put in your limit order with your stop, and then when it fills and it starts to move higher, move your stop above your entry, right? And then if it comes back down and takes out your stop, you watch again, you put your another limit order in, and then you just keep playing that game. And you just watch it bounce and bounce, but you're doing business at that support level. And I think it's an important nuance for entering trades in a bull market as compared to a two-sided market. Because in a bull market, the sharks are waiting at the dips. They are always looking to buy those dips. And so if you're getting those dips where support is holding, that might actually just be those larger players accumulating their position, right? It's a different behavior than what we had in the bear market. And so it's something that I'm paying a lot of attention to. And of course, something we've been talking about quite a bit in the brigade. Okay, so I just wanted to start with that, something to really think about as we move forward over the next few weeks, months, maybe even years. In this market, we are out of the bear market. That doesn't mean we won't get a pullback. I do think at some point, almost certainly we're coming back for 4,800 because that was the previous all-time highs and we just blew right through it. So I do think at some point this momentum is going to need to pull back to test that area. And of course, there's always a chance we could pull back down into this range that we've been in for the last few years, and that would be bearish to see, right? But until that happens, until we get the pullback and it does not act as support, my assumption is we are in a bull market, and you want to think about it like a bull market. You want to be buying those dips. You want to be selling those rips. Okay. So let's start, since we're already zoomed out on the monthly, and just give ourselves some perspective of what the market is doing on the monthly. Well, it is doing what we call one-time framing higher. One-time framing higher means it's making higher highs and higher lows. And that is bullish to see. A market that is one-time framing on any time frame is a sign of momentum. The train is chugging along, and at this point, it's chugging to the upside. And so we should assume that train is not going to just instantly come to a stop and reverse. It's going to have to slow down. It's going to have to roll over before it can start to go the other direction. So on a monthly time frame, this thing could keep going. When we look at the candlestick, we can see there was balance at that all-time high, right? There was a little bit of two-sided trade, a little bit of uncertainty. But this next candle, that is February, is proof that we still have this momentum on a monthly time frame. So now let's take a look at the weekly. Wouldn't you know? Same story, right? Lots and lots of momentum. Very little balance. Okay? They only had to spend a day dippity dipping, and those buyers step back in. Or sorry, a week, because this is a weekly time frame. 1 week to allow buyers an opportunity to get in, and then the next move. What do we have? Last 2 weeks, essentially, kind of like balance, an opportunity for buyers to get in, and this thing could keep going. Now, does that mean it will for sure keep going? Of course not, guys. There's no guarantees in this business. But right now, both the monthly and the weekly time frame are telling us we have momentum. There is no reason that momentum can't go on for weeks or months more. Let's zoom in and take a look at the daily. Okay, so now we've got a little more information. Right now we can see with a little more clarity what's going on with the market. So over the last week or 2 weeks or so, the market has been balancing on a day time frame. It has been moving up and down inside a range, building momentum, like a rubber band getting pulled back tighter and tighter and tighter before it gets let go and then it launches off, or a Jack in the Box, like you're just winding it up, do, and then it pops out. That's what this has been for the last few weeks. And what do we notice about the lows in this time period, right? Every time the market dips, okay, this is on a daily time frame. So every time it spends a day going down, what happens the next day? It turns around and goes right back up. Big old dip, spends a day going down. What does it do the next day? Next 2 days, right back up. Spends 2 days going down. What does it do? Turns around and goes right back up. Right? So on a daily time frame, we are seeing this concept that these larger players are buying dips. They want to get long the market. And I'm not talking about the ES, I'm talking about individual stocks, right? Individual companies that they want to buy, that they want to own for the next few months. So they're getting long. They're buying the dips. That is what we're seeing. Okay, but then we have a really funky looking candle up in here, right? We're starting to get some wicks at the highs. So to me, on a daily time frame, we do still need to pull back down and back test the support here around 50-50. Okay, so there is a very good chance, if not, today at some point this week, we will pull back down to there. All right, but what will that be when that happens? That will be a dip. What will these larger players likely do? Because it's a bull market, they'll likely buy that dip. So this is just something I want you to keep in mind. As far as the daily is concerned right now, there's not a lot of insights to be taken away from it. So let's zoom into the market profile chart and see if we can find any more detail in there. So the first thing that's jumping out at me when I look at the market profile is that we have been making higher lows in the overnight range, above the regular trading hours range. But this weekend, we made a lower low. Okay? So on Friday, we made a new all-time high, which had good excess and good taper. The market pulled back down into the range, and now the overnight market tested lower levels. But what happened when it did? They bought that dip. They stepped right in. So on Thursday of last week, we had an uncompleted auction. We left behind single prints inside the day's range. Now, at the end of that day, that was a sign of momentum. It was a sign that the market wanted to keep going up because we didn't need to pull back down and fill those single prints. Well, we traded all day on Friday above that price, made new all-time highs, and then when the overnight market broke Friday's range, when they broke Friday's low, where did they go straight down to? The base of those single prints, that unfinished auction from Thursday. Well, what happened the moment they did? They found support and they created very, very strong support here at the overnight low. And wouldn't you know, we're right back up in Friday's value area, which is sort of a fair price to do business. So this is the first dip being bought. They bought that dip. So here's how I'm looking at the market this morning. I'm seeing it as a chop zone first thing in the morning. Why do I call it a chop zone? That basically just means I don't really know who's going to win the auction this morning. For the first hour of the day, the market is likely to go up and down and up and down and up and down and grind all around just like it did all weekend long. Okay, just like it did at the end of the day on Friday. It is likely to just continue to chop and grind and chop and grind. So inside that range where it's going to be doing that chopping and grinding, I probably want to be very cautious considering doing business because it's going to be a gamble. It's going to be a 50-50 chance it could go up or it could go down. So inside the chop zone, I will step aside and let them chop it up. However, whichever way it breaks out of the chop zone, we are either going to get, let's zoom back out at the daily. We are either going to get a continuation of the momentum up. This train is just going to keep chugging along and we're going to get new all-time highs, or we're going to pull back down to that 40-50 area to look for support from this balance area that the market broke out of at the end of last week. Okay, so either one of those things, either a move to new all-time highs or a move to pull back down for support on a larger time frame, both of those will be excellent opportunities to make money, either up or down. So all I have to do is not get chopped up first thing in the morning. I just have to keep both my actual capital, not take on losses, right? And my mental capital, not wear myself out. Should I get long? Should I get short? Should I get here? Oh no, it's not working. Right? Instead of driving myself crazy first thing in the morning, trying to make sense of chaos, if I just step aside, stay calm, keep all my capital ready to go so that whenever we break out of that chop zone, I will have better opportunities. So how would I draw that chop zone? I would start with the overnight high. If you wanted to be a little more, you wanted to get in the trade a little sooner, you could use this node right here. So you're talking about either 5105 to 5108. That area is going to be the chop zone high, where we assume if the market is going to go higher, it should get through there, come back down and turn it into support. That will be the sign that the momentum will continue today. Okay? And we're going to call that chop zone low the base of those single prints from Thursday, which is also the overnight low around 50.88. That's the chop zone low. Same story there. If the market is able to get below there and it comes back up and turns that into resistance, that is a sign that they will be looking for a larger pullback with price. However, inside that overnight range, and in particular between Friday's point of control and Friday's low, okay, you're going to get a lot of chop and grind. And they're going to take it up, and then out of nowhere, they're going to reverse it and take it down. And then out of nowhere, they're going to reverse it and take it back up. So that is what I'm expecting this morning, and I'm mentally prepared to let them chop it up, to let them drive themselves crazy, taking short-term bets and getting squeezed over and over and over again, because I recognize the better opportunity. The opportunity that has a higher probability of working out will be once we break out of that chop zone. Any questions from the chat? Good morning to Will, Knapp, the Demo Trader, David G, Bust a Move, Jay, and Mr. Ree. Welcome, welcome. He says hit the like button. Yes, please. If you have not yet, please smash that like button. Bookmap is an awesome company, and they are doing something pretty cool here, giving this to you for free. The least that you could do is give them a little thumbs up as a thank you. Good morning to Mark, John H., and Frito says, just did it. Thank you, sir. So real quick, I'll just talk about what you're going to see on the screen. So over here on the left side of the screen, this is a market profile chart or a TPO chart. The way I use that is how I watch the price action. Most of my instincts about what the market is doing and how good of a job is it doing it, which is what tells me to trade or not trade, comes from watching the price action. Okay? So in this chart, I can see several things. One, I can see the areas where the market spent the most time. That's where you see the most letters. Okay. The second is I can see where the market brought in the most volume. So that is actual volume that traded on the live market. So understanding where the market spent the most time and where it brought in the most volume tells me where the market likes to do business. So for example, if I'm looking for a target on a move, a large volume node or a large time node is a great target to get to. If I'm looking for support or resistance levels to enter a trade, a large volume node or a large time node is a great place to do it. And if I'm just trying to understand what the market is doing, seeing how it acts in these different areas gives me an edge. Over here on the right, I have the Bookmap chart. Okay, so Bookmap, the main thing I'm watching is the heat map. The heat map is all the little colors that you see in the background. So on the right side, on the right of this little white column that you see right here, this section over here, that is the current order book. So where you see the darker colors, the more orange colors, that is where there is more liquidity currently sitting in the order book. If that liquidity is above the price, it is sellers, it is shorts waiting in there. If it is below price, it is buyers, it is longs waiting down there. Now, we won't know whether those are, for example, let's talk about the liquidity currently sitting at 51.10. Okay? That is sellers sitting there waiting with orders in the order books. Now, we don't know whether those are going to be people who bought at a lower price that are just looking to take profits up there, or if that's a new seller that's looking to enter the market because they think the market's going to reverse there. We don't know. We don't even know if that business will actually be had. There's a very real possibility as the market works its way up to that liquidity might just disappear out of nowhere, poof, and then it disappears. So the way I use the liquidity that I'm seeing in the order books is to give me insights about who the participants are and what might happen as a result of whatever they do. Obviously, where I'm seeing large pools of liquidity is an area where somebody with larger size is looking to do business. So what happens when we get there? First off, if we're moving in that direction, I'm assuming it's a magnet, right? That we're going to keep moving in that direction till we get to that larger node of liquidity. If we're moving away from it and they're piling on more and more and more, I assume they're trying to pull the market back up. Okay. And when we get to it, if it disappears, I assume it was just a fake out. It was just a spoof to get the market up to that level and vice versa. So what's cool about Bookmap and what's cool about the heat map is it lets me see, obviously there's not very much trade so far today, but it lets me see how those liquidity levels have changed throughout the day. So here's an example so far from the overnight. There was a large pool of liquidity here. As the market was moving away, they were adding more and more liquidity, right? They were getting darker and darker and darker. Well, as soon as it started to come back towards it, what do? Boom, they move it down, right? They didn't really want to fill orders here. They just didn't want the market to go higher. They wanted to pull it back down, right? So then the market's going sideways and it starts coming down again. And what do? Boom, they move it down again because they don't really want to fill here. They just want to stop the market from going up. Okay, so then the market's going sideways. It can't come down and it starts going up again. And then what do? Okay, this isn't working. So now let's come up with a new plan. They try it again here. They try it again here. Okay, so at the same moment that this liquidity right here disappeared, what showed up here? Right, let me get a different color here. What showed up on the upper end at the exact same moment? Liquidity up there. So by being able to see where the market participants are and how things are changing throughout the day, I can get an idea of what they're trying to do. Okay. So being able to see it in the current order book is great. That's fantastic. And anyone who has, any kind of, level 2 software can see what's in the current order book. But being able to look at the chart throughout the day and see how that liquidity changed in comparison to price, that to me is an edge. There's no exact science to it. It's just, it gives me a feeling of who's in charge and what's happening. Also, I like to use the stops and icebergs indicator, which you can see a few icebergs in here. An iceberg is essentially one of two things. It is either a larger player trying to hide their orders or it's likely just a computer doing business. Computers generally use icebergs as a way to accumulate positions. So if I'm seeing tons and tons of icebergs, particularly on both sides of the market, icebergs at the low, icebergs at the high, icebergs at the low, icebergs at the high, I know this isn't real participants. These aren't those bigger sharks attacking. This is just short-term day trading bots trying to make a buck, squeezing the market up and down and up and down and up and down, and taking out stops on either side. Okay? And then occasionally you will see me click back and show this set of charts back here. This is what we call the market internals. And this just basically gives me an under the hood look at the market, right? When I'm looking at the price action, I'm looking at the ES. That's what I'm watching. So when I look at the market internals, what I'm seeing is the actual exchange level business on the NYSE and the NASDAQ. Are there more buyers? Are there more sellers? Is there more volume going long? Is there more volume going short? So on and so forth. So generally speaking, I'm not paying a lot of attention to this unless I'm seeing something in the Bookmap or the market profile that I want to confirm, right? Oh, okay. It looks like they're getting momentum and they're going to go higher. Let me look at the internals and see if the internals are also getting momentum. We got 3 minutes till the market opens. Let's just click over real quick. We'll take a look at the NQ. My guess is it's also going to open in the chop zone. So let's figure out what those levels will be. Oh, yeah. Oh, yeah. We're talking about a chop zone, baby. It's chopping. Okay. Let's just quickly zoom out and look at the daily for the NQ. Yeah, so you can see the ES was in a balance area where it was getting two-sided trade. And last week it broke out of that balance, which is the beginning of momentum to the upside. So we can feel bullish about that because the market has momentum. And until we make a lower low on the daily, we should assume that momentum is going to continue. Lower low on the daily regular trading hours. But when we look at the NQ, what is it? It's just a big choppy mess, right? It's just all two-sided trade. Buyers and sellers competing with one another. Trying to take the market higher, trying to take the market lower. So I would be much less bullish on the NQ today unless they got above this high and started to build some momentum. That's the upper end of yesterday's range. Otherwise, it's 50-50. They could go up or down. So I would see the NQ as a chop zone, but I would actually use, I mean, again, this is if you want to be very cautious. If you want to be a sniper and wait for the absolute best opportunity to long, I would wait until they get above 18,060. And I'd be looking for longs up there because they could still reverse the market anywhere in here and just give you chop and chop and chop and chop. And I would use Friday's low as the low of the chop zone. So to me, the chop zone on the NQ this morning is between 17,745 and 18,065. Okay, and they're likely to just chop around in there and grind it up and grind it down and get everyone long and get everyone short and squeeze them all on both sides. But if they can break above that high and turn it into support, they absolutely can make new all-time highs. And if they get below this big node in the overnight, which is also Friday's low, turn that into resistance, they are likely heading much lower. Chop zone on both markets. And the market is open. Let's see what happens. Chop zone. It is also worth noting we left behind some weak references on Friday, Thursday and Friday of last week. We got some weak lows here around 50.91.92 and one up here at 50.98. So if the market is going to chop, those are the first levels for the market to reverse. Maybe it gets down there and that's all it needs, and then it can turn around and head higher. Maybe it gets down there, that's all it needs, and then it can turn around and head higher. Also, if we get above that overnight high at 51.08 and turn it into support, the first target to the upside is the weak reference at 51.12. And then if that doesn't reverse the market back down, new all-time highs are in play. So let's just sit back, relax. We'll watch them chop it up. We'll see what happens when we test these various levels, and that will give us insights to carry forward for the rest of the day and even the rest of the week. Tom says it looks like 50.90 is the base of the chop zone. Do you think it's worth a shot to take a scout from 50.90 to the resistance zone of the chop zone? Here's the way I feel about chop. There's nothing wrong with trading chop, right? If you wanted to short the upper end of the range, particularly if it got like a look above and fail, if it tried to get above and then it came back in, or you wanted to try to, like buy the lower end of the range for support or vice versa, buy a look below that fails, there's nothing wrong with that. Like that's a great way to trade. It's going to keep going up and down. So if you wanted to get in a trade for that, you absolutely can. But I have just found personally for me, it's better not to do that because I might make 2 points, 5 points, whatever, right? I might make a little trade in a chop zone and make a few bucks. But more likely what will happen is I'll go absolutely mad. I'll enter that, I'll buy that long, and then it'll grind, and it'll grind, and it'll grind, and it'll grind, and then it'll poke below, and then it'll fail and come back up, and I'll be like, mother effer, and I'll just be so upset, and then that ruins me for the rest of the day. Now, psychologically, I'm chasing my P&L, I'm less confident, I feel like I'm not in the flow of the market. So just for me personally, it's better if I know the market's going to be choppy in the morning to just step aside, let them chop around. And then when that bigger breakout happens, now there's opportunity to make 10 points, 20 points off a trade. And it's only one trade either way. Take a trade in a chop zone and make 3 points or take a trade on a breakout and make 10. So it's just like, I'd rather wait for the better opportunity and have my mental capital fully intact. Meanwhile, the rest of the competition is just worn out from an hour and a half of going sideways. You know what I mean? So the market just left behind a weak high, reversing a tick off from the overnight high. They are likely to go take that out. That will give them a chance to break out of the chop zone. And we'll be watching to see if that's what happens. We're also watching this liquidity at 51.10. Does that disappear when we get to it? Or does it act as resistance? Look, they're making it darker. They're really trying to turn it into a magnet. They're telling that market, don't turn around yet. Come poke up here first. So we're going to watch that liquidity and see if it disappears as price gets closer to it. Good morning to Grizzly Bull, XO, 200 Dogs, and Gino. Welcome, welcome. If you're new here, say hello in the chat. Smash that like button. Participate. It's a live stream. It's way more fun if you guys participate. Ships is here. Good to see you. Willie T in the house. Okay, so they've created a very, very weak high here. They're reversing again and again right at the overnight high. We know what that means. They're likely to take the market lower, convincing sellers to pile on. Sellers are seeing, a double top, a triple top, and then boop, they come right back up and they take out those stops. Very, very chop zony of them. Chopalicious. Arjit in the house. Debbie B. Kill Zone. Johnny V. And Kyle. Welcome, welcome. Ahoy to holding a fart. Welcome to you. Okay, so we got that push away from that weak high. One of two things is likely to happen here. Either they instantly turn right around and take out that high, heading up to test that liquidity at 51.10, or they pass back through the opening price. If they pass back through the opening price, they are likely to squeeze any buyers getting in right now, and that will increase the odds we're heading to 50.98. So watching that opening price at 50, just above 51.03 to see what happens there. Can they hold it or does it break? Charles, that's all you do? You just sit and watch what happens at these levels? That's right. Just sit and watch. It will give you an understanding of what is happening so that you can take advantage of the bigger opportunities when they come. Novice trader in the house. Good to see you. Welcome. Welcome, Percy. Good to see you. He says, push the like button. Yes, please. 151 brave souls hanging out. How many of you have been willing to give us a thumbs up? Or a thumbs down. If you're not having a good time, you can let us know. Ronald, appreciate you. So it is worth making note, we are stuck in this incredibly tight range here. But where is this tight range? Right smack dab at Friday's fairest price to do business. So it makes sense that there's some two-sided trade here. But one side will get squeezed. All right, if half the traders are going long, it goes up. Half the traders go short, it goes down, it goes up, it goes down, it goes up, it goes down. At some point, half of those traders are going to get squeezed. My guess is the sellers will get squeezed below. The buyers will get squeezed below the opening price. Can they hold it? What's happening to liquidity? Up at 51.10. It's getting thinner and thinner. They were using it as a magnet, and now they're like, oh, guess it's not going to work. Frito, be stunning and brave. Hit the like button. Thou shalt hit the like. All right. Well, there's the pass through the opening price. So that increases the odds that any buyers above the open are about to get squeezed here, and that we are likely to head down to test that area around 50.98. But what do we remember as the market is going down? That we left behind a very weak high up at the high today. So even though they are likely to do a little dippity dip, they will likely turn right back around and come back for that high. It's a chop zone. They'll chop it up. And so you say to me, well, Charles, if you knew the market was above the opening price, and you knew that if we got through the opening price, we were likely to get some selling as those buyers get out of their longs, right? Why not just put a limit sell order right at the opening price so that as the market pushes through, you're in a short and you can take advantage of that momentum? Well, that's the problem with a chop zone, because knowing to get short is one thing, but where do you take profits on that short? How do you know where to get out of it, right? And that's what's very difficult to know. So it is still a better thing to wait, because sure, I think they're going to come to 50.98 before they reverse back up, but they could reverse anywhere. And there's just no way to know. And without certainty, without confidence, there's no reason to get into a trade. At least the way I do it. Bust a Move says the ticks are looking good. Still too early for them? Yes, sir. Inside a chop zone, the ticks are not super helpful first thing in the morning. None of the internals are. We've got to just spend time going sideways. We've got to get everybody who wants to go long, and then everyone who can get squeezed, and then everybody who wants to go short, get short, and everybody who can get squeezed. We have to keep doing that until participants are exhausted. Then the market finally breaks out. At that point, the ticks are much more reliable. Okay, so there's a repair of that weak reference. Next question, is that all the market needed? Can we turn around now and head back up for the high? If so, we look to repair the weak high. If not, we look to head down and test the levels down at 91 and 92. So do the buyers step in right now. Right here, right now, right here, right now. What else am I making note of? Well, first off, this low is still weak. We didn't fully repair it. We have to get 2 TPOs below. So we left behind a weak low. And who joined the party at the low? An iceberg. Who joined the party at the high? An iceberg. So what is probably happening? A little bot shenanigans. They're going to push it up. They're going to push it down. They're going to squeeze the market all around. It's a chop zone. David G says home sales at 10. That's 10 minutes from now. We will look out for some volatility there. Cool Bean says hold the line. I wouldn't trust it, Cool Beans. They're going to come back through that level sooner or later. They left it weak. Weakness always wants to get repaired. For those of you guys that have your own Bookmap, you may be wondering why I have my settings for the volume dots set up the way that they are. A lot of people, they have their settings for the volume dots so that they're seeing, every single move that the market makes. I have mine set with really large numbers. You can actually probably take a look. Volume dots. Yeah, volume's got to be above 50 contracts for clustering, and a minimal display is 300. So they're not going to show it to me unless it's 300. And the reason for that is when I see a volume dot, one of these little circles that you see right here, what that is showing is that is the delta between buyers and sellers. So if you're seeing a red dot, there was more sellers. If you're seeing a green dot, there was more buyers. And essentially with the settings the way I have them, generally what it means is somebody got stopped out there. Right? So if you see large red dots, probably the market's actually going to go up. Or if you see large green dots, market's actually probably going to go down because they just took out a bunch of stops at that particular level. So that is another edge that I use. And so when I see that we are inside a chop zone, I see icebergs at the highs and the lows, and I see a bunch of volume dots popping up, I know all they're doing is getting short-term traders long and short and then moving around very quickly to squeeze them. And they will keep doing that as long as it lasts. As long as those short-term traders keep entering positions. Okay, so we're going to play the same game we played before. When we were above the opening price, we were thinking if they pass through it, they're likely to squeeze the buyers, making a move to the week low. Same thing now. If we pass through to the upside, we're likely to squeeze the sellers, heading up for the week high, which is that overnight high. Cool Bean says, I'm not well versed in market profile and auction theory. Does the Brigade membership include educational videos or the e-course a separate purchase? It is a separate purchase. If you're thinking about getting into the two-way auction process and you're like, I don't know if this is right for me, maybe you have a way you already trade that works for you and you don't really want to change it, just sign up for the Brigade membership. It's only $10. You can hang out for a month. Watch me live stream every day, ask lots of questions. And if after a month or, however long, a few weeks or whatever, of watching the things I talk about, watching how they play out, both throughout the day and, minute by minute, if you decide it's something you want to get better at, then you consider buying the e-course to get the education. But as always, when I'm live streaming, both here and with the Brigade, you can ask as many questions as you want. And I'm always happy to answer. Thank you, Debbie B. All right, so the sellers held that opening price, which means they're likely heading back down to 98. Same as before. Is that all they need to do to reverse again? Just one more tick lower and then they come back up. And talking about auction theory, if you guys are wondering how can the market just keep going up and down and up and down like this, well, it's important to understand we're just inside of what is called the value area from Friday. The value area is where 70% of the day's trade took place. So this was an area where 70% of the trade took place on Friday. It's very easy for both buyers and sellers to do business in here. They both feel confident. Anybody that feels like that all-time high is going to be the high and we need a larger pullback, they're happy to get short inside of this area. Anybody who thinks the momentum is going to continue and we're going to make new all-time highs, they're happy to get long in this area. So it is not unusual to see that we just have chop the next day, as both buyers and sellers are comfortable getting into positions here. Ship says the $10 a month is totally worth having him as your morning teacher. I highly recommend. Thank you, sir. Surely within a month, I'll say something that'll make you $10 or stop you from losing $10. Especially if you trade the ES and a single tick is $15. All right, so what are we noticing about the Bookmap? It's starting to go dark. Liquidity is beginning to disappear. So somebody in the chat mentioned housing numbers coming out at 10 a.m. That is likely what is happening. These day trading bots are turning off. Boom, 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 boom. So that the news bots that react to those home numbers can take over the market. So I suspect in 1 minute, we're going to get some serious volatility. And what we will do is we'll just let them grind all over the place and then see what happens when the liquidity steps back in. Once the color starts to enter the order books again, is there more support or more resistance? I am also making note of the fact that this node we've been monitoring this morning up at 5110 remains there, even as the, day trading scalping bots disappear. So that is likely a larger player trying to do something. Are they going to get short or are they going to take profits from a long? I don't know, but I do think somebody wants to fill something there. Here's that volatility. Willie T says, Piratetraders is the first no-brainer I've found in my life. Thank you, sir. That was the goal. I could charge a lot more money, but I made it $10 so that it's a no-brainer. At least give it a try. If after a month you feel like it was a waste of your money, you only lost $10. Who cares? And if you're interested, just head to piratetraders.io/join. Join the party. Man, they couldn't even break out of this range with the volatility from the news. Oh, so choppity. All right, well, speaking of the brigade, it's time for me to switch over to the brigade stream and say goodbye to everyone here on the Bookmap stream. I appreciate you. Please smash that like button on your way out. As far as what to expect this morning, I do think we want to, at the very least, repair this week low at 51.98. But there's a pretty decent chance in my mind we will find support somewhere in here and turn back around and head for that high. You can see the levels that I'm watching. 51.08 and 50.88. That is the chop zone high and the chop zone low. So it's going to be very hard, at least for the next half an hour, to know where to enter trades inside of there. But if we can get above and find support, there's nothing wrong with getting long. If we get below and find resistance, there's nothing wrong with getting short. Or if we chop so long inside the range that we print the C period in another half an hour from now, whichever way the C period breaks, either, the high or the low at that point, we could look for momentum there as well. But this just feels like they want to just grind and grind and grind for the time being. So not going to be super exciting here, but plenty of opportunities to come. With that, I will say goodbye. I'll wish you all the very best. And we will see you here next Monday morning. Members of the brigade, let's set sail. Thank you very much.